Hello everyone, welcome back. And as you can see on my screen, these are the trades I took today on my live account. I started trading with Interactive Brokers a couple of months ago, and recently I started a new account with them with starting from 20,000 Canadian dollar. So I shared all the results here. You can check out all of these trades. I took in total of 5 trades today, all inside macro, and you can see how much profit I made, around $8,000. My risk was 1.5 to 2% max on my live account. That means there is a trade where I risked 2%, and it was the last trade on this chart. I took that trade around 10:50 to 11:10. So I know it's beautiful. And even today, our mentor shared my executions on his Twitter page. I've been following him for almost 4.5 years. I've not seen him sharing any other people's executions and trade chart on his profile. So execution were really good, as you can see on my screen. And now I'm gonna be taking you on the chart to show you how I did it. So let's start our today's lecture, and I bet you will find today's lecture very insightful. There are some signatures from price I'll share with you all that I consider as very high probability. So if you have been watching these AMD lectures, you will enjoy this one, right? So this is a AMD pattern, guys, right? I've been talking about this AMD pattern since the starting of April. So this whole month I covered and dropped a lot of lectures about this, but I never talked about this specific part. All right, so when we get a AMD pattern, this is a AMD reversal pattern, we also get range high and range low. All right, so this is our range high, this is our range low. I recognize them and I refer to these two levels, AMD high and AMD low, as aggressive distribution zone. That means what? Once price reaches at the range high, it will be aggressively showing reaction. If it wants to offer a reversal, this is how it will look. All right, so once it trades into the second aggressive distribution zone, that means here in this scenario the range low, I'll be looking for price to drop some signatures here. All right, so if price wants to continue the trend lower at the next 4-hour candle, right, it will drop a signature. And that's how I know, and that's what I use to know today's bias. So if price wants to deliver lower, if the next 4-hour or AMD candle wants to continue the trend lower, it will have to close this candle's body below the range low. That means below this aggressive distribution zone. All right, if price pulls back up like this and closes a candle's body inside this AMD candle, right? This was our highest probability target candle. This candle's buy side was target, this candle's low was the target. So once price does this and it closes a candle's body inside this candle, the next 4-hour or next AMD candle will very likely offer a reversal. All right, remember this. As I'm teaching and covering AMD patterns, I've been doing it since last month. I guarantee you this is a very important information you need. So you will have to understand the narrative behind it. Pattern, you already know about it, right? So I'm gonna go through this structure again. This is the structure that formed today at on 4-hour time frame. All right, so how to know price will continue dropping lower after it takes out our range low or range high? If it's closing the candle's body inside the range candle, inside the AMD candle, that means price will reverse. Why did price reverse here? Because it left this signature. And this third candle, if it's closing below this low, the next 4-hour candle will be bearish. If it closes inside this candle, inside the range, very likely price is offering another reversal, and there will be a higher time frame key level right here from where price will be getting support. Price will never get support without any arrays. There's always arrays. So if there's a higher time frame bullish array, that's high probability, price will trade into it, and this is the pattern it will leave behind. So now let's take a look at what really happened today and how I was able to crack today's bias. I also told my students inside Discord, those who were asking early inside Discord on chat, that today I favor bullish bias. And on yesterday's lecture, I also talked about the insight of today's bias. I gave a little bit of insight and it was bullish. And here, I'm going to repeat myself again what I taught you yesterday. Very, very important. So if you have not watched yesterday's lecture, make sure you're watching it. Fair value gap forming at 10 a.m. on 4-hour chart is high probability for support and resistance. And this is the specific candle price used to get support. All right, this is not just a random candle. This is not just a random fair value gap. You can go back and look through. You will see a lot of important gaps are forming. The gaps that are forming at 10 a.m. on 4-hour are high probability for support. And here, another gem. I talked about it yesterday as well. Fair value gap forming on 4-hour at 10 a.m. with the trend will deliver liquidity supporting the trend. Do you get it? So that means if you see a fair value gap on 4-hour chart at 10 a.m. in support of the trend, like we are in a bullish trend, right? Before this fair value gap formed. And this fair value gap formed by supporting the trend, that means this was a bullish gap. When this scenario appears on chart, price will be respecting the trend if it drops into the fair value gap. That's what I've been saying since last Friday. And it happened exactly like that. We traded into the gap. Yesterday, this gap was my draw on liquidity. It gave me one very nice short W. And I took 2 losses after. And today I was able to mitigate it with 4 wins. I would say one was a small loss, and I'll be talking about it as well on the lower time frame when I take you there. But I did exactly what I did yesterday. I just repeated what I did yesterday. Yesterday I did not make money, right? The trade I took in 2022 that made me $100, same trade today making me $1,500 to $2,000 per trade, or minimum $1,000. So it's not the scenario that changed, it's the understanding of the market that improved, and I'm willing to share all this knowledge with you all, and trust me, it will be beneficial. So once price confirmed this SMT yesterday, I was expecting to see a bullish delivery today. All right, and this is how I did it. I'm gonna zoom in. I'm gonna try to explain as basic as I can so that those who are beginners can understand this completely. So this 4-hour candle today, yesterday was confirming this candle is our AMD candle, right? So that means what? Once price confirms the AMD candle, this signature confirms it, our highest probability resistance and support and target becomes range high and range low. So once price takes out the range high, leaves the signature, the next draw on liquidity, next target is this range low. And as we talked about the signature, let's take a look what happened. All right, so this is the signature that I was talking, right? This, our AMD candle, and price after taking out this range low, it closed this 4-hour candle inside this range. All right, and I want to share another small gem here. You can see these equal high, they were so much visible, like you could see them from 10 kilometers away. It was so visible, and it was also visible on ES. Something that I say to my students always, and if you are new, remember it, write it down. If you can see equal high, same equal high, equal low and unfilled fair value gap on NQ and ES, that's the highest probability drawn liquidity. Price leaving this double top to come back up again. This is a signature, just like this is a bullish reversal signature, right? So once price cleared out the range low, it also traded inside support. So this was support from yesterday. How did I know price will be stopping at this support? You must remember this gem. The PDA that price used previously for support and resistance, it will use the same PDA for support and resistance as long as you can see it on chart. So that means what? If you can identify a strong support key level or PDA like this on chart, right? This is the same key level price will be using again and again for support, and price confirms it. It did a little bit of manipulation below it, but look how price was respectful here, 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 and again today. All right, so once this fair value gap, once this end dog, it's an end dog. I marked it wrong, by the way. So this is an end dog new day opening gap. So once price violates this end dog, I want you to study and journal how high probability that structure looks. All right, that short structure looks. And what I want you to journal, this is a high probability support area. And once a high probability support area inverses, it creates a high probability inversion. So this is from where I'll be looking for shorts on higher time frame. This is my long-term narrative. If anytime near soon we go below this end dog, I'll be bearish on higher time frame. All right, guys. So back to this example, price closed inside the range low. It had equal highs to take, and this is what basically giving me bias, bullish bias on 4 hour. So now I drop down to the hourly chart, and this is a gem I shared with my students, those who were watching me, those who were looking at chat today, and we were waiting for a trade. And I was basically just telling them what's the bias and what candle to look for. And this is a very important gem here, guys. Fair value gap from 10 to 11 a.m. on hourly and 4 hour, very important. And I also wanted to add the candle on hourly chart, also on 4 hour, from 10 to 11 a.m. is very, very important for New York AM sessions bias. All right, we are focusing on trading after 9:30. Soon I'll be also teaching you, and we'll trade with you pre-market. That means we'll be trading London session, and also 6 to 8:30. 6 to 8:30, that's what I consider as pre-market. Very soon, next month, I'm planning to stream since then. All right, so now let's take a look at the chart. What happened here, guys? Look at the time here. All right, the candles forming at 10 to 11 on hourly chart every day important. All right, and look at this inversion. Look at this range. This is a clean BPR range, right? And if you look at the time, this fair value gap, which turned into an inversion, formed 11. And this is what I was saying to my students here. You can check the time inside Discord. Every text is recorded. So when I was saying this, I was also referring to them, keep an eye at this candle. As it formed yesterday and inversed yesterday, it very likely will be getting respected today as well. So BPR, simply put, this was a balanced price range aligning with end dog. So two bullish arrays aligned. BPR is something that I will never ignore on chart. It's such a strong array. And this hourly candle, 9 a.m. candle, how did it close? It closed by respecting this bullish array. That means hourly chart was already screaming to me since 9 a.m. that we are bullish. And this was the signature I got. I talked about it. So if you feel like you did not understand anything, you can ask me any question inside Ask Hydra channel, and I'll get back to you as soon as possible. So once price confirmed this signature, this bearish fair value gap had no meaning to me. All right, why was that? We had relative equal highs on NQ and ES. Price closed a candle's body above BPR. This is a bullish pattern. We also have OTE at this range, right? So simply put, from this dealing range low to the high, we retested the OTE, closed these candles bullish. Do I need any more confirmation to know the trend is going to be bullish? I don't. So this fair value gap has no importance to me. I wanted to see it turning into an inversion, and that was it. Now I drop down to 15-minute chart, and do you see how every time frame is telling you the bias one by one, is clearing the path of unknown, is showing you the structure, is showing you the path. So chart and price, time itself will tell you the bias. I never have like a specific bias, a guaranteed bias at the beginning of the day. I let price tell me what's the bias, and some days I'm wrong reading it. But that doesn't mean that it's not working, because today it worked. And I'm saying it to those who believe I've never taken this much winning trade on stream. I did. You only think that because you joined recently. Those who have been watching me for a month at least, you know that we had so many days where we owned 2 back-to-back Ws, 3 back-to-back trades. We own 2 trades at AM, we own 2 trades at PM. So what I'm showing you today on chart, I can do the same thing on stream with you, right? So this information is very valuable. If you understand it, you will be able to utilize it and make money on your own like today. And if you become good like me, or even better like me, even the mentor of our mentor will recognize your skill like ICT did today. He shared my execution, and he never shared anybody else's execution on chart. So that was great. All right, so a 15-minute chart, guys. This time frame was also repeating bullish signature. You can see price closed the candle's body here at 9:45 above this bullish fair value gap. So that means what? 10 a.m. 4-hour candle very likely will be pushing higher, right? And look at 15-minute chart. We have so much buy stops here. Now, before I take you to the lower time frame, I want you to show you how I was able to take a short W trade at 8:20 to 8:50 to 9:10 macro. That was my first trade for today, and that was a W short. And here I would like to explain to you how I did that. So this was the scenario when before I was taking the trade. All right, we had a bearish fair value gap here, and these lows looks like we have a SMT, but if you check, we had no SMT at these lows. That means what? This equal low can be seen on NQ and ES, and that's what making it a high probability draw on liquidity. And this fair value gap is high probability because on the left side a breaker is aligning with it, right? You can see a swing high, swing low, clean purged, price close the candle's body below with a fair value gap. So remember it if you don't know. If you get an inefficiency near to all swing highs and swing lows, that inefficiency is high probability for support and resistance. All right, so here this fair value gap was telling me the bias. If this gap was failing, I was willing to short, but as we left the willing to long, but as we had these equal lows, right, I still wanted to see price dropping lower. And most importantly, don't forget about this hourly BPR, which is unfilled. So before 8:50 to 9:10 macro, this was our dealing range, right? And we were trading at, let me put it like this, we were trading above the discount of the range, right? We tapped into the discount of the range, but the gap that is unfilled at discount of this dealing range is not traded. So this is like a magnet here. So now I drop down to the minute chart and focus here, guys. Another important gem. The bias is bearish. I hope you understood that part, right? So bias is bearish, and when bias is bearish and you have a bearish fair value gap with swing high inside it, that swing high will be your highest probability reversal key level. This is something that I taught to my students in 2023. So I have an old lecture about this inside our Discord. If you are interested, you can check it out. It's available inside 2024 Discord workshop. So this swing high was inside higher time frame bearish period, which is this 15-minute fair value gap. So this is a high probability reversal key level, right? And I was expecting price to reverse after taking out liquidity from here, and that's exactly what happened. As you can see, we traded at the reversal key level, and then we formed this inversion, guys, right? And price retested to the inversion. It looks like a very clean short, and after a while we had a bearish SMT. I don't remember which pair generated it. I think it's Dow. As soon as price generated this SMT and my bias was bearish, I was looking at this fair value gap, all right? And I was like, I'm gonna skip to this part. Right here, I don't know that if price will be respecting the gap. As I'm bearish from higher time frame, I was expecting this BPR to fail. And remember, guys, inversion with a single fair value gap is less probability compared to a BPR. A BPR is greater than an inversion, all right? So when a BPR fails, that's a trade I want to take. And if you look at my charts, my execution, this was my first trade with a stop loss at this key level where we had SMT, and I was basically targeting this range low and the equal low. I showed you guys on the 15-minute chart. So this candle gave me entry, and after that it was a very smooth running short. This was my second trade. I took at 9:20 to 9:40 macro inside it. My entry was at 9:41, 1 minute after our macro ended, but I considered this as a very high probability execution, very high probability scenario, and I'll explain to you why it was a high probability scenario. But first, let's take a look at this side, guys. All right, I've been saying it a lot on stream and also on lecture. A fair value gap that has price action inside it, that specific fair value gap will be high probability as an inversion when gets violated. And just take a look how many times price respected this fair value gap here. Once, twice, multiple times here, right? So we do have price action inside this fair value gap, and we traded at, don't forget about this, our hourly BPR, right? This is the OT of hourly dealing range. That means we are looking for support, and that's when this bullish pattern formed. I was not so confident in this trade. It did formed inside 920 to 940, but I wasn't so confident to take a trade before 930 today. I usually don't. And even after 930, I waited a little bit, and this is where price conformed. And my execution was at 941 at this candle, and I executed after price basically like got support from this inversion. So I know this part, that this fair value gap is important, and price here was just revisiting to the discount of this range, right? So from this dealing low to the high, where do we have our discount? Inside this inversion. So that's what I was also saying on chat today inside Discord, that if we break below this inversion, we're gonna be bearish, but I don't favor bearish delivery. And that's when this structure happened. Those who have not watched my 920 to 940 macro lecture, basically 930, how I trade 930, that lecture, make sure you're watching this specific lecture. And I also want to mention another lecture that helped me to catch this 930 trade. I have a lecture about 930 order block. So let me find it real quick. Yes, this one. So it's inside Advanced Lecture 2024. And this is the first lecture, 930 order block model. All right, guys. So this is a 930 order block model. You will have to watch and complete watching the lecture to understand this part. And if you are a very beginner, I highly recommend you completing my 3 model workshop. You will find it on Hoop. That will cover all the beginner stuff that you need to understand to make wealth like me. Highly recommended. So this was my second trade. I hope you understood. So the next trade I gave as a signal inside Discord, and I wanted to look at and remember this BPR, all right? When I gave you guys signal, I was watching this BPR for price to get support. Now let's drop down to the minute chart. So if you look at my calling today at 9:52, I said regular trading hour gaps high from today has strong support. Now remember this key information. So we had a BPR on 50-minute chart, and this was our scenario before 9:30, right? And always remember, guys, price will give you insight about how it will be delivering 9:30 candle before 9:30. And this is a structure that I really love. Those who have been trading with me, I bet you also love this. When we get accumulation phase before a high impact news, or before 9:30, or before an important time, it shows clean power of 3. All right. So as I know this is a bullish array, I was expecting this, guys. All right. Accumulation, let me put it nicely on chart. Accumulation happened here, and then manipulation, and then distribution. And we closed the candle's body at 10:01 above this breaker block, right? So this is the accumulation phase, and after getting support from this bullish array, we closed the candle's body above the accumulation phase, and that indicates strong support. And that's where I gave you guys signal at 10:01. Looks promising it if activated. I don't know how many of you were able to take it, but I think some of you were able to take it. So this was my call at 10:01, and this was the candle. I took an entry at 10:02. Remember, the key information here is power of 3 before high impact news, and price delivering liquidity using power of 3 after the news. When will you expect power of 3 like this? Before the news. If you have a power of 3 scenario, price will be forming structures and signatures of it before the news, and after the news you will see it. Same goes for 9:30. Before 9:30 you will see accumulation phase like this, and after 9:30 price will be doing distribution. And I really love this structure. It forms many times at 9:20 to 9:40 macro, also at other times, but I've seen it forming many times at 9:20 to 9:40. Today it formed at 9:50 to 10:10. So once it went above this accumulation phase, this is where I took an entry with stop loss down here, and I was targeting the range high here. All right, that means I was participating in distribution cycle, and this was a beautiful trade. This was my third trade, and this was my last trade at 10:50 to 10:20 to 10:40 macro. This was my last trade, and I did a 2% risk on this trade. At first I executed with 1% risk, then I pyramided into my position, and overall it was 2%, and that's what I do on my live account. 1.5, minimum 1% to maximum 2%. All other trades were with a risk of 1 to 1.5%. So simply put here, guys, price traded again inside 50-minute BPR. It dropped a SMT inside this bullish support area, and then it gave entry at 10:35 from this inversion. My target was this relative equal high and the range high again, and you saw how price was respectful to regular trading hour gaps high. Remember it, guys, if you have a regular trading hour gap on chart, price trading below it, it's high probability for price to get resistance from that regular trading hour gaps low. Price trades above the regular trading hour gaps high, it's strong for support. Yes, there are other PDA, but I find it very useful. So these are the trades I took on my live account today. I hope you understood. It was a 25-minute lecture. I think 27 minutes, almost half an hour. So I hope you appreciate it. There are so many gems I shared. If you have any question, feel free to ask me inside regular Ask Hydra channel, and I'll be keeping up with this type of lectures every day. My aim is to make you guys, those who are not independent here, and I believe a lot of you are not independent, to make you independent in coming 3 to 6 months. All right? And I'll be sharing a routine for those who want to progress and who want to get mentored with me. I'll share a protocol with you all. All right? And I'll personally guide you all, those who need extra care, inside our Discord to make you profitable like this, to make you profitable in 3 to 6 months, maximum 6 months. I will teach you how to read price. I'm not going to guarantee you profitability, but I will teach you how to read price like this.